All right, guys. So we're back again. Ask a CPA podcast here. I've got my good buddy Brett Phillips with me today. My name's Russell Wallace. Brett, how you doing?
Hey, I'm doing amazing. I'm killing it. Killing it. I'm
Killing it.
pumped up. It's tax season. Loving it, man. We're getting so much workout every day. I just love watching those numbers grow and watching the number of backlog just decreasing significantly day by day. So we're
Yeah,
uh we're getting a lot of workout. It's great, man. I love it. I love season.
yeah. I almost hope some of my clients don't see that I'm recording a podcast right now because they're not excited about the timeliness of their work delivery. We've got a lot of work to get out, and we're working through it. But
Well, hey,
this time it takes a little longer.
if they are, man, make sure to hit that subscribe button. This isn't
That's
a
right.
free podcast. You got to subscribe. Sorry, guys. We charge for this podcast and we charge with subscriptions. So hit that subscribe button, hit that like button, give us some feedback. Let us know what you like, what you dislike in the comments down below. We don't do this for free. This is a lot of brain power going into these
Yeah.
podcasts.
And if you hear something that you like and you think a friend could use it, share that podcast too, right? Text it out to
Yeah, say hey, I saw this goofy bald guy and this guy with great hair talking about whatever we're talking about.
them.
And it was good tax advice. So yeah, I think we got a couple really good questions today. I think it's gonna be a banger of a podcast, as the kids say. It's gonna be a good one.
Banger.
Yeah. So did you do anything for spring break? You work right through it?
No, little 3 day, 2.5 day trip to Savannah, Georgia.
Nice. How's that?
Yeah, it was good. Never been there before. Had a brother doing a vow renewal. And,
Nice.
they got a bunch of
She say
parks in
yes?
Savannah. She did. She did. I mean, thank God. They've been married for like 17 years. So, I told him it was a little risky, right? Like you're going to ask a question again that you got a yes once. I mean, are you sure you're going to get a yes
Yeah,
twice?
yeah. Don't push your luck.
Yeah. But man, it's a great city. If you've never been there, it's worth a trip, and it's a lot of outdoor stuff, kind of hopping around at some shops and restaurants and things like that. And
Yeah.
a lot of big oak trees, so you're shaded all the time. It makes it a nice little walk or stroll around all the little neighborhoods. It's cool. It's very nice.
Yeah. Do they have all the moss hanging from the trees?
Yeah, yeah.
Yeah, that's cool. That's a cool town. We drove through there once and stopped for lunch. We didn't get to really explore it too much, but it seems like a really cool old town.
Yeah.
How was the weather nice?
Yeah, weather was great. It was perfect.
Yeah.
Apparently, it had like gotten cold and rained a couple days before, or the day before, maybe a couple days before, but it had already turned around. I mean, you're just walking around in shorts and loving it. We did
Perfect.
a ghost tour. You ever done a ghost tour before?
No, no,
Yeah,
how was it? I remember
it
we were
was
in New
fun.
Orleans, we were talking about doing that.
Yeah,
I don't think we ever did.
yeah. No, we didn't. We should. We should. Next time we're in a place and they've got one of these things, we should do it. It's kind of cool, especially a city like New Orleans, Savannah. I mean, these are very old cities by American standards.
Yeah.
Kind of pre-revolution cities, right? So,
Was
there's
it
just
scary?
yeah, it wasn't scary, but it was interesting, right? And because if you go around and you take the bus tour, they're like, oh, this building was built here and this building was built there and that sort of thing. You take the ghost tour and they're like, all these people were killed over here and this is where
Oh,
they used
no
to
way.
hang people over here and those kinds of things. They talk about like pirates and different stuff like that too, which is kind of cool. But
What if you moved there and you were like, all right, honey, we're just gonna buy a house, and like I found this older house, it's like right by downtown, and then like a year later you have friends come in town and they're like, let's go on this ghost tour, and you go on the ghost tour and they're like, this is the most haunted house in all of the town, and it's like your house.
it's like you thought it was a good deal, but it's just, there's a reason it's set on the market forever.
Right, no wonder this house was on the market for 2 years. The
Yeah.
ghost tours keep driving by every night.
Yeah.
That's
That's
funny.
awesome.
So that's cool, man. So you had a good time, good food, good drinks.
Yeah, yeah, all of that, all of that. So you went to your beach house, right? Because
Yeah.
everyone doesn't know like Brett's like super rich. He's got a beach house, that sort of thing.
Yeah, like a 600 square foot condo. Not quite a beach house, but a very small 1 bedroom condo. Yeah, it was nice though. It was beautiful weather, man. I hadn't been down there when it was like cool out in the spring, so this is the first time I've taken a spring break in 20 years. So it was nice. Like it was kind of cool out, like high 60s. You could wear a
Yeah.
sweatshirt and shorts and go for a walk on the beach. It was beautiful. We did a couple hikes, which were fun, and yeah, it was great. I had to work most of the time while I was down there, but it's all right. The
Yeah.
price we pay.
The price we pay. Well, let's dive in here. We've got a couple of good questions. We're bumping up a couple of weeks. The deadline's going to be here.
Yeah,
So I don't know about you, but little shameless plug here. I mean, we still got some space, so we could get a tax return done or two. So if you have questions, be sure that you come over there to askacpa.co or come over here to the show comments, and our contact information is there. So you can get in touch with Brett and his team and get your tax return done, get your super complex, tax consultation, and get all of that done here right
yeah.
before the deadline.
We're probably filing extensions at this point. I don't think we can get any more new clients in before the deadline, but yeah, we'd be happy to file an extension for you. Are you still taking on clients to get done before April 15th?
So until April 1st, we set up a deadline of April 1st.
Okay.
So we got a couple days. Couple days.
Yeah. Yeah. Nice. Cool. Yeah. Yeah. We're already a couple weeks behind on data in, so I'm really pushing everybody. Like, let's
Yeah.
every day. I'm like, come on, guys, it's the last push. I feel bad because everyone's been working so hard, but we really gotta deliver on these returns. People are needing to know their numbers, and even if it's
Hmm.
an extension, you can extend the time to file, you can't extend the time to pay. So even if you plan
That's
on
right.
extending, you need to make a payment if you think you're gonna owe by April 15th. Not only that, we were talking about earlier, your Q1 estimated tax payments due April 15th as well. So
Yeah.
get out that checkbook because you have to make an extension payment plus Q1. We usually typically will bundle those together, make them both as an extension payment, and then if you have any overpayment on your tax return when we eventually file it, we'll apply that over to the next year. And if you have a large, too big of an overpayment, we can always take a portion of it as a refund. Yeah, we like to just combine that with your extension payment so you know that you have plenty paid in with that extension payment.
Yeah, that's smart. That's smart to combine those two together because a lot of people don't realize this, but tax penalties are all based on tax owed. Generally, there's a couple of exceptions, but most of the time it's just a percentage of tax owed. So if you don't owe any taxes, there's no penalty, right? And so, small caveat there, that does not qualify for S corps and partnerships. Those penalties are based on kind of a per month, per partner, per shareholder penalty, right? So if you got to file those extensions. You got to make sure you're on top of that. But for individual returns, right, it's all based on tax owed. So, that's a smart thing to do, just overpay a little bit. That way you don't have to make sure and get the number just right, that sort of thing.
Right. Especially if you're going to be receiving K1s or, income that you're not sure exactly what the taxable income is going to be. Even if somebody's going to receive a big K1, we would say go to that partnership and try to get an estimate of what that income is going to look like. So even if it's ballpark, we'd like to have at least a good guess, a good stab
Yeah.
at, calculating something so we're not totally surprised come.
Yeah. Something else I tell clients is don't be afraid of an extension.
Right.
And I mean, there's just no reason to do so. Your audit risk doesn't go up or anything like that. There's no reason to be in a rush. And one of the mantras I have is I tell clients, look, tax prep happens in the spring and tax planning happens in the summer, right? So if you want extra time with your CPA and want to really think about, and debate about, what if we did this, what if we do that, those kinds of things, the summertime's the time to do that. It's definitely not April 1st. And
Right.
nobody has any time on April 1st, right? We're all just trying to hang on. So if you want some tax planning, just file an extension. It's not a big deal. And again, your audit risk doesn't go up. So you hear that from a lot from especially new business owners. It's kind of first time they have substantial tax liabilities, and they're
Yeah.
making a lot more money than they have before. And they're like, well, I don't want to get audited, and it's not a thing. It's not a thing.
Yeah, right. It's not a thing. I file my tax return. My tax return is typically the last one that I file in a given year. So, um, you know, it's same
Like a
with our
good
business
battlefield
return.
commander, right? Last one off the
Right.
field.
That's right. We file it last, and it's typically on the 15th. I mean, we know what the numbers are going to be for a long time, but
Yeah.
yeah, we don't submit anything until the very end, and so Yeah, you shouldn't be afraid to file an extension either. There's nothing wrong with it. Just know your numbers but you're absolutely right. If you want to sit down and do really good tax planning and really minimize that tax liability, do it over the summer where you have plenty of time. You can sit down with your CPA. He's not in a rush. He's gotten plenty of sleep.
Yeah.
He's
Yeah.
not running on 4 hours of sleep and three Red Bulls.
But I think you were just telling me before the pod here that you had like 11 meetings today or something, right? I mean,
Did, yeah,
that's
11
a
meetings.
wild number, right? That's, like, hey, sorry, they're the client's in the middle of a conversation. You're like, hey, sorry, man, I got a hard stop here in like 3 minutes.
Yeah, I usually tell him when I get on, like, hey, I got another meeting on the 30. Like, we're gonna have to tie it up. So let's go ahead and jump right in because we got a limited amount of time.
Yeah.
So I do that Calendly thing, and I put on there like 30-minute consultations or 60-minute, and almost everybody chooses 30 minutes. And so my calendar is just like 30 minutes. Every 30 minutes, there's a
Oh,
meeting,
yeah.
and which is fine. I mean, I don't mind. I like talking with people and getting it booked. But yeah, it makes for a little bit of stressful days. I'm sitting there taking notes and trying to remember everything that's going on.
Yeah. Yeah. You
Yeah,
gotta let
it's
AI do that
stressful.
stuff for you.
I know. We were talking about that earlier, man. I know there's some really good AI note takers, and then they'll kind of summarize everything for you, right? Have you used a good one?
Yeah. Fathom. I like Fathom a lot. They don't store
Fathom.
your information. So if you're in an industry like ours, you want to make sure that AI is not learning on your information.
Right.
So they specifically exclude that. So they never
Okay.
save that, never store it, that sort of thing. So it's good. It's good.
Yeah. Cool.
And it's reasonable price. But I like to do that, and then I'll even share it with clients. Like here's the meeting. It gives them a list of agenda items. It'll break it out like things Russell's going to do, things Michael's going to do, that sort of thing. You kind of have to play with it a little bit. You got to coach it, right? At the end of the meeting, I'm always like, so just to recap, and I'm doing it for AI, like just to
Yeah.
recap here, this is what Michael's going to do, and this is what, that sort of thing. So then it makes the notes nice and clean.
So is that I take most of my calls just like on speakerphone on my office phone. Could you do it like through an app, or how do you make it work? Is it through your computer,
Yeah, I use
or do you
Teams
do it through
mostly or
Zoom,
Zoom,
Teams?
so I don't know. Because they call in to the number, then it'll do it, on like a Zoom or Teams.
Okay.
If it's just like speakerphone, I'm not sure.
I make the whole office listen to my calls.
Oh, that's brilliant. I bet your assistant who's right outside your office loves this,
Yeah.
Just love staying on top of everything you've got going on.
I walk around and I get my putter out and I'll hit some putts, try to focus on what's going on.
There you go.
I'll be
Well,
I'll be
let's.
spot on come golf season here in the next few weeks.
It is the big negative about being a CPA, right? Is that this time of year you get to see the beautiful weather and just look at it. Just look at
Yeah.
it. That's all
Yeah,
you can
you
do.
can't do anything.
Yeah. Well, let's dive into a question here. We got our first question from David here in Miami, Florida. So, David runs a landscaping company and recently purchased several pieces of equipment. Can we explain Section 179 and whether it makes sense to expense this year or depreciate it over several years?
Mm.
So when a client comes to you and says just random questions, it's like, hey, I bought all this equipment. Do I need to expense it all this year or spread it out? What do you tell them?
Tell them it depends. Depends on their situation, what their financial situation looks like. There's two accelerated depreciation methods. There's Section 179 and there's bonus depreciation. Section 179 will allow you to take that deduction, that depreciation deduction, down to zero. Allow you to take your taxable income down to zero. So if you have $100,000 of taxable income and you have $1,000 of fixed assets that you added that year, you can take 179 down to zero. The remainder will either carry forward, or you can opt out and just take bonus on certain assets, or take 179 on certain assets. Um, Bonus depreciation will allow you to take it below zero. So in that same example, you have $100,000 of taxable income, $150,000 of fixed assets. If it's in a year where you're allowed to take 100% bonus depreciation, you can take that all the way down below, so you can take a $50,000 net loss. But if your business is growing, you may not want to take all the accelerated depreciation up front and offset income that's going to be taxed at, 5 or 10% or a very low effective tax rate. You may want to wait and opt out of bonus depreciation or opt out of Section 179 and take just regular marks. This is probably 5 year 5 year equipment. You can just take it over those 5 years. It's still somewhat accelerated. You get more depreciation in the first few years than you do in the last few years. It's not just straight line, but that is typically more favorable if your income is going to increase significantly over those next
Hmm.
5 years. I typically do recommend that to most clients, although time value of money is important too. When you're thinking of this is a new business, you want the cash in hand, you want to cover payroll, you want to make sure that you can keep the business afloat. You may not want to come out of money at all for taxes. You really got to talk to the client and see what their financial situation is and see, do they want to maximize that depreciation to minimize their overall tax liability over the next 5 years? Or are they thinking, I just don't want to pay any taxes in the next year or two, and then I'll worry about buying more equipment in year 3 to 5 as the business grows. So every business is in a different part of the business cycle. There's start, and then there's growth, and then there's maturity, and then there's the exit. So every business is in a different part of the business cycle. So you just kind of have to talk to your client, figure out what their needs are, and it depends. Every client's different. Every client's financial situation is different. That's why you have to work with your CPA hand in hand and say, okay, can we look at what does it look like if we use it all? If we take 179 or take bonus depreciation in year one, what does it look like if we opt out? What do you recommend? I want to be tax efficient as possible, um, and just kind of look at the overall picture. What do you think, Russell? Is that bad advice? Is that good advice?
No, that's great. That's great. I mean, the only thing I would add is that the other piece that comes in there is the the structure, and like if you started a new business, you may have some W-2 income already. Your spouse may have a lot of W-2 income. If you're not already an S corp yet, which a lot of first year business owners, you don't want to be an S corp because it kind of hurts you on this strategy because some of the basis limitations. But those are all kind of things you consider, and that's why we say all the time that you know tax planning is done in the summertime. And so it's tough to have these kind of in-depth analysis. Lay out 5 years of projections and all of that whenever you're trying to get some tax returns out of the door. Right. One of the biggest things you want to consider when you're looking at some of these things is that tax planning is done in the summertime and prep is done in the spring, right? And so
Yeah,
if you want to lay out 5 years of projections and take all of this stuff into consideration, you just have to make sure that there's enough time to do it. And
right.
every CPA wants to do a great job. You want to do a good job. I want to do a good job. And so we want to have the time to do it. And so that's why when we talk about, extensions and things like that, it's okay to have an extension, especially if you're in this kind of situation, because there's so much nuance and, nobody wants to rush and miss something and realize that you missed considering something, 12 months, 24 months later when you can't really do anything about it anymore.
Yeah, yeah, that's a great point. And yeah, proper tax planning is so important, especially in the early stages of a business. I mean, you really don't want to make any mistakes. And we've seen clients take huge amounts of depreciation, and then they're like, why do I owe all this tax in the future years? It's like I'm paying all this money to pay down these loans, and it's like, well, debt on those assets. You're going to continue to make those payments, and you're not going to get a deduction for paying down, a liability. Um, so yeah, it's important to understand how that concept works and how your balance sheet works and what's a deduction and versus what's a pay down of a liability. I
Mhm.
see a lot of taxpayers, you know, they don't understand that concept. I mean, with for good reason. I mean, they're not accountants, they're not um financial professionals. I see bankers that don't understand that concept. It's not like something that most people really understand unless you're in there reading financial statements all the time.
Yeah.
But yeah, that's a great question.
Yeah, I was just about to dive into some debits and credits on a call with a new client just yesterday. I started to dive in and I was like, wait a minute, is like anybody on this call? There's like 4 or 5 people. I was like, is anybody on this call an accountant? And everybody was like, no. I was like, well, okay, we're not even going to go there, right? We're not. There's no point. No one's going to care or understand.
All right. Does anybody want to take a nap?
Yeah.
Let me explain some debits and credits to you. I remember sitting in accounting 101, like trying to keep my eyes open, like, oh, this is so boring.
I'll never be an accountant. Yeah.
This guy's the worst.
Yeah.
All right, cool. So next question comes from Marcus Hill in Brookhaven, Georgia. No idea where that is, but seems like a cool town. With the tax deadline so close, is there anything I can still do to save on taxes? That's a great question. What do you think? What do you think, Russell? What are you telling your clients right now when they say, "Wow, I owe 15 grand. What can I do? I don't want to pay. I want to pay this tax. What can I do right now?"
I told them they got two options. They can go back in time and talk to me in December, or no, I'm just kidding. Yeah, uh,
I'm like, dang,
it,
Russell, you're
yeah,
cutthroat.
or they can stop making so much money, right? Those are your options. No, it is a consequence of making money, right? You're gonna owe taxes, as they always say. Death and taxes only guarantees in life, and if you make more money, you're gonna owe more taxes, or at least have a higher tax liability. And it is the truth that the best tax planning can be done at the end of the year. But if you didn't do that, we're here now, we're a couple of weeks from the deadline. And so what are you going to do? You could still, if you're a small business owner and you don't have any employees, you can still contribute to a SEP. So you can set it up and contribute to it right now. You can actually still do a solo 401k. The Secure 2.0 Act actually extended the ability to set up a solo 401k into the next year, that April 25th or April 15th deadline, just like SEPs and Simples. Um,
Really? I didn't know that.
yeah, yeah. So it's not
That's
too
cool.
late. And I think you can only do the employer contribution, right? The profit sharing part of it. You can't do the employee
Okay.
contributions at this point.
Yeah.
But so there are some limitations, but you can still do it. And then again, the SEP. If you don't have any employees, right? So you can max that bad boy out. I think it's 25% of taxable income up to 68 or $69,000 for 24. So there's still a couple of things like that you can do. The other thing that you can do are some of the things we were just talking about, right? So let's really think about, like, before we just jump into taking massive depreciation deductions. Let's like think about what the real ramifications are, because we don't want to take a deduction again, like you said, time value of money. We want to take a deduction at 10% when next year we're going to pay tax at 37%, right? That doesn't
Right.
make any sense when there's a significant difference there. So that's something you can do there. I don't know. You got anything? Got any last minute ideas?
Yeah, I mean, just go back through assuming you're a business owner, go back through your expenses for the year, if there are any, or even if you invest in a partnership, any unreimbursed partner expenses or any
Mm-hmm.
unreimbursed, any expenses that you paid personally that weren't paid through the business. To go through it, just go through with a fine tooth comb. I'd download everything to Excel and just make notes and like go back and think like, okay, what was I doing in January? What was I doing in February? Okay, yeah, was any of this business related? Who did I go to dinner with? Who was I? Try to make notes and make things document as much as possible. Of course, you want to do this on the front end as much as possible, but if you're in a spot you need some tax deductions, go back through everything and think what was business related and make sure that all your subscriptions, everything that's obviously business related is being paid out of the business account.
Mm-hmm.
Sometimes just the other day I saw like a Canva payment I was paying on my personal credit card. Why am I doing that? That needs to be going through one of my business accounts.
Yeah.
Um,
Those
and
software subscriptions, they get you every
yeah,
time.
yeah, and it's not much. It's like $12 a month or something. But still, every little bit counts. And go through all your deductions and look them over again and make sure that there's nothing that you can go back and add. Make sure that and there's big items as well. If you have a business auto, make sure that that's being included. You really want to
Mm-hmm.
make sure you're maximizing those expenses. I know a lot of people are very conservative on their business expenses, but if it's ordinary and necessary in the course of business, depending on your industry, there's obviously case studies and things. You don't want to get crazy and take deductions that have obviously been disallowed by the IRS. But especially meals,
Mm-hmm.
software costs, professional fees. We see that a lot where a client will have like a Schedule C business, and we're charging them. Let's say it's $1,000 tax return, but a big portion of that should be allocated to that Schedule C, because this would have been a $500 tax return if they didn't have that. Half
Hmm.
of our professional fees can be allocated to that Schedule C and make them tax deductible versus being just a personal expense and non-deductible. So, there's all kinds of expenses. You really want to go through them with a fine tooth comb. And if you're unsure and you think, I'm up against the clock, just file an extension, make a payment, and over the summer, let's sit down, let's go through them, sit down with your
Hmm.
CPA, knock it out, make sure that everything's been included, make sure nothing was overlooked, and really beat up that tax return. I mean, you can always find more deductions if you sit down and really beat it up and ask questions and go through all of your expenses. I mean, they've done case studies where they've given the same set of facts and circumstances to like 10 different CPAs, and they get like 10 different answers. I mean, it's not,
Yeah.
it's an art. It's not a science. So to definitely, go through everything, look through it, beat it up. And if you need more time, file an extension. Don't be afraid of an extension. Just make an extension payment. You can always apply that to Q1 or get it refunded if you need to.
Yeah. But I think, when you're talking about, understanding what an expense is, right? So is it reasonable, necessary, those kinds of things. I think that's really key because you know your business better than anybody else. You know your business better than I ever could. And, I think we do a good job of trying to understand your business, understand, what kind of expenses are or relate to your business and which ones don't, those kinds of things. But you're going to know it better than anybody. So any CPA that you're working with is not going to mind you asking the question, what's an expense? And I try to just tell people kind of frameworks of ways to think about it. The other way I explain it is there a profit motive or not? As you start talking about reasonable,
Mm.
necessary, and kind of go through some of that. But I say, look, at the end of the day, is there a profit motive? Your Canva subscription, right? Is there a profit motive attached to that? Well, of course there is, right? So you have the subscription to make the flyers and the logos and the graphic design stuff so that you can
Yeah.
advertise, right? So you can bring in more business, right? And so that's the way to think about it. And any CPA that you're working with, especially you, especially somebody like me that we care about our clients a lot, then we're going to take the time to walk through that. I mean, it's a 5 or 10 minute conversation to make sure that you understand, but it's something as a business owner you really need to make sure that you've got down.
Right. Absolutely. Yeah. And I think working with a professional, I mean, we'll save you way more money in taxes than we'll ever charge. It's a no brainer.
Absolutely, absolutely. Well, Michael, Marcus, thanks for those questions. Brad,
Absolutely.
we got a couple weeks before the tax deadline. Looking forward to April 16th, that's for sure. And I always love April 16th. It's a day that we can have off, have a cocktail in the middle of the afternoon and relax, just printing out e-file confirmations and having a cocktail.
That's right, man. What are you
It's a
doing?
good
Are you
day.
playing golf? We need
We
to get out
should.
there and we need to book a tee time.
We should. It's got to
April
be,
15th on a
it's like a
Tuesday.
Thursday or two. Is it Tuesday?
Yeah, it's on a Tuesday.
Okay. Yeah. We should. Of all this nice weather I've been seeing out of my window, then like surely April 16th is going to be a good day
It's
too.
gonna pour. It's gonna pour rain all day.
We'll have to move to bowling. Well, guys, appreciate you joining us. It's always a lot of fun hanging out and talking about some taxes, talking about your businesses. If you have a question, be sure that you're leaving it in the comments. You're going to askacpa.co. That's askacpa.co. Go in there, let us know your questions. We love answering them here on the pod. And subscribe and like, and share it with your
Absolutely.
buddies. Right?
Yeah.
If you heard something you like, then share it around.
Yeah. If I had friends, man, I'd share it with all of them, but maybe next year.
Maybe next year. All right, Brett. We'll talk soon, buddy.
All right. Thanks, Russell. See you, buddy.